So, as you guys know, as the news has made it pretty clear, the market is all over the place because of what is going on with Russia attacking Ukraine. And, if this potentially is the, beginning of another war, I'm sure a lot of you guys out there are probably starting to panic, starting to freak out when it comes to your investments, when it comes to your money. What are you doing with your money and your cash, your investments? Has your strategy changed? I'm interested to hear what you guys are doing. Feel free to leave a comment down below. Do you even have a strategy or any kind of plan or idea? I do want to dive into this article. I'm not going to read the whole thing, how the market reacts to war. And I was reading it and want to just point out this. I want to jump to this one section here, how to handle a war based crash. And really just try to help you guys understand, anyone out there who is fairly new to investing, or maybe you're not even new to investing, but you're just like panicking, you're freaking out, and you're worried because your hard-earned money, your portfolio might be down quite a bit, or maybe you think it might tank much more, or again you're like, hey, war, I ain't trying to keep my money in there. Well, let me just read this little section first. It says, the implication from these historical sources is that an armed conflict and the effect it has on the market should be viewed as a buying opportunity for quality stocks and investments. Most of the time, the market simply shrugs it off. This might be odd, given how serious we think an armed conflict is. However, the implication here is that even an armed conflict doesn't have serious impacts on the U.S. economic fundamentals or the corporate profits related thereto. In fact, from the beginning of World War II to its end, the Dow was up more than 50%, over 7% per year. During both combined world wars, the stock market grew 115%. My friends, 115%. That ain't too bad, right? The adage that it's a good idea to buy when there's blood on the street turns out to be quite literally true. That isn't to say that there aren't classes of investments or sectors that don't suffer during armed conflicts. An increased likelihood of armed conflict tends to decrease stock prices, but even more so when the armed conflict is a surprise. All right? Are you guys following? When it's a surprise. During the actual war, stock markets actually tend to be less volatile than at other times, which is quite baffling, with exceptions like the Gulf War, when it was on par with historical volatility. So I'm not going to, we can continue to dive into this if you guys want. This portion down here, this last little overall, I don't see it likely that a localized conflict in Ukraine would in any way affect global supply chains by itself. So in other words, this probably, it might not really amount to anything bigger. It could, of course. It absolutely could. Who knows what Putin might do? And his thoughts with, President Biden might be that, hey, he's weak. He's not going to do anything. So we can just run up in here and do whatever we want. I don't know. And that would certainly change and influence the way things go. But as you guys just heard and saw, remember, during the actual war, the stock markets actually tend to be less volatile than at other times. And this portion here, an increased likelihood of armed conflict tends to decrease stock prices, but even more so when the armed conflict is a surprise. So, hey, I think a lot of people, I don't think really anyone was surprised about Putin's actions. I think we kind of know where he stands, how he feels, like I said, about the U.S., about Biden in particular, especially compared to Trump. So, I don't think many people are surprised. I think a lot of this has already been kind of anticipated and kind of put into the stocks, the stock market. The fear's already been there, and the market has been tanking. So as a whole, I don't, I think where we are at is kind of where it's going to be. Now, of course, like I said, things might continue to escalate, and maybe things drop a little bit more, but I think we've seen quite a bit of a correction that maybe potentially, for the time being, I mean, I don't want to say that it's the market is done going down, because I think this is the start of a bear market. But I also view it as, and as we kind of just touched on it, right here, literally that, buy when there's blood on the street turns out to be quite literally true. Well, hey, if what is going on right now and the market is down, this is, especially for anyone who's out there watching this, that's in your 20s, your 30s. I don't know if I'll say in your early 40s, I'd say, because I don't think none of us should be really pulling out any money from retirement funds accounts that we have. These are all long-term plays, long-term accounts, really. So, I mean, pretty much anyone watching this, for the most part, should be investing for the long term, for over 10 years, 20 years, 30 years from now. And none of this should be really, you shouldn't really be worried, is my point. You should be looking at this as a buying opportunity, as the time to look for the companies that you've been wanting to get into, but they've been so, overpriced and whatnot. Well, with the correction that we've seen with so many companies, this is the chance for you to make those deals, get those deals, buy in. And maybe you don't want to take the large, sum approach. Don't just throw $1 million in at once. Maybe you do. Again, this isn't legal or financial advice. Taking a dollar cost averaging approach is kind of a smarter way, where if it does go down more, well, you're not, at a loss right now as much as you would potentially be if you just threw it all in at once. So just know that, hey, where we are now, and a lot of stocks already have started to see a quick rebound. My baby BBIG today, oh my God, that thing just like had the quickness. And I luckily got a few shares at the cheap price it was at, but nothing like I was hoping. So just pulling up my baby BBIG Vinco Ventures, it had a nice, it just like fell off and just fell down. And I'm pretty sure it was 226 the lowest. Maybe that was it. 223, this says right here. And then it just, bounced kind of off that. So to me, that was nice, because it was like an instant bounce, which means that kind of 225 might be where there's pretty good support. And, it might be where we can expect it to kind of get that reversal maybe moving forward. We're waiting for Vinco Ventures to release some more PR, some news about like the spinoff Cryptide, our dividends for every 10 to 1. So yeah. So I didn't want to mislead you guys. Spinoff is 1 share of Cryptide common stock for every 10 shares of Vinco Ventures. So, and I don't believe the date has been set in stone yet. I think this is why it's still so crazy. And there's a lot of volatility here. But once this, I think that ultimately, for every 10 stocks you have of Vinco Ventures, you will get one new Cryptide from the spinoff that Vinco Ventures is going to have. So that's one of the major reasons there's so many people jumping on board that feel confident about potential squeeze here. And this is a play that, even with everything going on, like I still got money here. I've been averaging down with these opportunities that, we're seeing here with the price so cheap compared to where it's been. And it's only been over the past month. You can see it would create higher highs and higher lows. So it would kind of go here and then went there, and then it went higher, and then it went like higher than it was down here, and so on and so on. So that was a good thing. Then all this news and everything that's starting to go on has just obviously brought it down much lower than what that pattern that we started to see before. So I believe it's going to get back in the upward swing of things now. So this is just one stock where my game plan hasn't changed. And if anything, I've just been dollar cost averaging and getting my average down lower with these buying opportunities. And, we still got my dividend portfolio every weekend contributing $25 every week. And I might actually add a little more money this week while a lot of stocks are down. And the same thing with our growth portfolio. And hey, if you have a Roth IRA, now this is where, I got to make an updated video on the Roth IRA. I don't talk about it enough, but that is where, that's my ultimate retirement kind of account portfolio right now. And with that, the question is, do you go kind of all in right now? Like, do you just throw your full year contribution in right now while stocks are cheap? Or knowing that, hey, this could be, the beginning of a bear market and things might get cheaper by the end of the year. So maybe just doing, a small amount every week or, every month might be a better approach. And then at least, as we get halfway through the year, you gauge the way the market's going, how you feel about things. If you want to throw a larger amount at once, then you can do it. If you want to continue just doing a small amount every week or every month, then maybe you go that approach. But in any case, I just wanted to make this video talking about with everything's going on with the war and Ukraine, Russia, and inflation. Like, has my game plan changed? No. Do I think your game plan should change? Well, that's on you, right? Of course, you are the boss of your money, and no one could tell you what to do. So despite what you might hear from me or any other YouTubers or whatever you might hear from Jim Cramer or whomever, remember, you are the boss. You get to make those ultimate decisions. So you can't blame anyone if things don't work out the way that you would like. But at the same time, if they do work out, you're the one who gets all that glory, right? You get to bask and enjoy the fruits of your labor. So as that article kind of pointed out, though, this is not the time that you should be necessarily panicking or freaking out and selling. These might be the times you want to look for, if anything, more buying opportunities. But I'm going to wrap it up there. Feel free to leave a comment down below with your thoughts, what you guys are planning to do. This is just one of my kind of growth stocks that I'm invested in, that I have money in, and that I'm a huge fan of. Not legal or financial advice. I believe in what they're doing. What they're trying to do, their vision moving forward. And hey, I wanted to share this update because I do think there's a lot of FUD out there. And I want to make sure people know there are some loyal, apes out there, got them diamond hands, still holding despite the bloodbath that we've been experiencing. So I'm going to wrap it up there, but feel free to leave a comment down below with your thoughts. If you haven't already, smash that like button. I do appreciate you guys. And of course, subscribe to the channel, hit that notification bell so that you guys can stay up to date on all of our latest and upcoming video content. But all right, my friends, you already know what it is. I got to keep it moving, but I'll see you in the next video. Peace.